It's kind of rare to actually take the first offer that you get in an M&A auction.
Right. Well, what's interesting, too, is that one of my movers today was, I think, Match Group, because there's some conversations out there in the world among traders that Meta or Twitter might be interested in Match. So, and I do wonder if there's more talk about maybe M&A within the social space.
It's still hard right now for like big tech players like Meta, you mentioned, if they were to do an online dating deal. I think there's something called Facebook dating already, so that's something regulators would look at closely, where we see the big tech companies doing consolidation. This one is really an exceptional example where Elon Musk owns a lot of big tech companies, but they're not acquiring Twitter, and there's no overlap between any of his assets.
And I want to get back to Kurt Wagner. He's the one who wrote the story about Elon Musk landing the deal to take Twitter private for $44 billion. Leanna Baker, Deal Team's reporter, did a lot of the reporting over the weekend about the companies that were helping finance it and what ended up happening
Crucial
in
to
terms
getting
of
it
play-by-play.
across, right?
Crucial to get it across, yeah. So we're really grateful to be joined by a couple of great voices on this. Kurt, what's the next thing we need to keep an eye on in terms of your reporting moving it forward? What are you looking at? What do we need to be watching? What does our audience need to be watching?
Sure. I mean, the immediate thing is there's going to be an all-hands meeting internally for Twitter employees today at 2 o'clock Pacific time. So that's in about an hour and a half. So I'll be doing my best to kind of report about, what management tells employees. My guess is they're not going to have a lot of answers this early. There will be certainly a lot of questions. But I think, moving forward, I think you look at things like once Twitter does go private, are there going to be layoffs? Are there going to be parts of the business or parts of the company that are just totally cut off, right? And I think that's only natural when you're no longer a publicly traded company. There's just parts of your employee base that you don't need. And I'm sure there's going to be a lot of anxiety around that. I'm interested to see what folks who work on, policy do, because Elon has talked a lot about free speech and kind of maybe opening up Twitter, removing some of those policies or certainly relaxing some of them. And so if you're someone who works there because you believe in those policies, do you stay, right? Like, do you feel like you're even needed at a place like that?
Hey,
I think there's going to be a lot of change.
Real quickly, just 30 seconds, 20 seconds.
Yeah, sure.
Because this is going to be a private entity, and obviously Tesla's public, a public company. Can there be synergies between the two companies, or no? These are going to be separately run?
I think it's too soon to say. I mean, it's weird to think of Twitter, the social network, and Tesla, the car company, having a lot of synergies right now. But, there's a lot of possibilities in the future. I'll just say it's a little too early to say, I think.
And Elon Musk definitely does things his own way. You guys are the best. Bloomberg News technology reporter Kurt Wagner on the phone from San Francisco, and Leanna Baker, Deals team leader at Bloomberg News, here in our Interactive Brokers studio, really covering all the different facets of Elon Musk buying Twitter and taking it private.
Yeah, really grateful to have both of you with us this afternoon. Thank you so much for taking the time. Let's get back to the markets because we are less than a half hour away from the close. Here's Charlie Pellet.
Hi, thank you very much, Tim. 29 minutes to go precisely. The Dow, the S&P, NASDAQ, best level of the day. We'll give you the numbers in just a moment. Let's recap, reset. Twitter, obviously the big business story of the day. Twitter shares surging now by 6.5%. Twitter now at 52.09. Billionaire entrepreneur Elon Musk making it official, agreeing to buy Twitter for $44 billion, using one of the biggest leverage buyout deals in history to take private a 16-year-old social networking platform that has become a hub of public discourse and a flashpoint in the debate over online free speech. Our coverage will continue. Twitter shares up now by 6.5%. The U.S. stock market higher across the board. Worth pointing out that at one point the Dow was down 488 points. The Dow is up now by 181 points, a gain of 0.6%. The S&P reversing earlier losses, up 14 right now, higher by 0.3%. NASDAQ now rallying 118, up by 0.9%. At one point, NASDAQ was down 116 points. 10-year yield 2.80%. Spot gold down 1.6%, 19.01 the ounce. West Texas Intermediate crude down down 2.7%, 99.25 a barrel on WTI. In Shanghai, a weeks-long COVID-19 lockdown has gotten even worse. Workers in hazmat suits fanning out over the weekend to install steel fences around buildings with positive cases. And in Beijing, the process just getting started as authorities started shutting down a bustling district in the capital to quash fresh outbreaks. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
They're between a rock and a hard place because, locking down an entire country of so many people to prevent the spread of a virus that's incredibly infectious, it's a battle that's very difficult to win.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Vaccine stocks now higher across the board. Pfizer up 1.6%. Its German partner BioNTech up 6.8%. AstraZeneca shares just turning lower. They have been unchanged. Right now we're looking at AstraZeneca down less than 0.1%. Moderna up 6.6%. J&J up by 2.3%. Recapping, Elon Musk does secure a deal to buy Twitter. Twitter shares up now by 6.4%. S&P up 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we're very pleased right now to be joined by Bloomberg Markets correspondent Kriti Gupta, who has been keeping an eye on everything that's been happening to the markets, individual equities, when it comes to the, surprising, I think for many people, announcement that Twitter is being taken private by Elon Musk at $54.
I love Kurt Wagner saying, pretty shocked that we actually got here.
Yeah, and he's been covering Twitter for 8 years. Kriti Gupta, I'm wondering what you've been watching specifically with regard to this, because we're seeing other social media companies higher in the wake of this, and we're also seeing Tesla move lower as a result.
Oh my gosh, I'm so glad you brought up Tesla and other social media companies, but I think the one that really catches my eye is the Digital World Media SPAC.
DWAC.
DWAC.
Digital World Acquisition Corporation.
Down 13%. I mean, one of the big questions, right, is that if Elon Musk goes into free speech and all of this, will Donald Trump get his Twitter account back? And why was one of the reasons he kind of created this media company of his own?
The reason.
Yeah, it was because his Twitter account was suspended. So to me, what's interesting here is that the DWAC spinoff, essentially Trump's media company that he created, is down 12%. But it's not the only one. You have Snapchat moving. You got Pinterest moving. I'm just going to look quickly at Facebook. But the thing that all these companies have in common is that, of course, a lot of it is based on ad spend. So that's going to be a big part of it. Snapchat shares down 0.3%. Pinterest actually up 1.5%. And that matters because if you actually look at some of their business models, Pinterest is far more similar to Twitter in terms of how it accomplishes kind of its bottom line. Basically, Snapchat has a lot more to do with virtual reality, a little bit more lately, local location services, events, that kind of thing. Yeah, the data
around that stuff too.
Exactly. But that being said, Snapchat's still down just 0.2%, I believe, on a day where the S&P 500 was down as much as almost 2% earlier.
Is the key word there, right? Now up 0.4%.
And you mentioned Tesla at the top of this, right? Tesla is the biggest weight on the S&P 500 right now. So it's this idea that if you, what is the phrase I keep using with Ed and I keep messing up? Stealing from Peter to pay Paul. I get my references horribly wrong, all my cliches wrong. But this is really important when it comes to how Tesla and Twitter have been trading. If you actually look at correlations, because I love to nerd out with you guys. If you look at correlations between Twitter
Peter
shares,
to pay Paul. I had a check too.
That's the one. Close enough. You get my point. Twitter and Tesla shares, you look at the correlations on a 5-day basis for the last couple of weeks, it's actually negative, which tells you people have actively, every time Twitter gets higher on some of these headlines, people have actively been selling Tesla, and it comes down to the idea that people were concerned about how Elon Musk is going to finance this deal, because as Ed Ludlow says, he's the richest man in the world, but he is cash poor, which is why he had to get over $25 billion of financing.
But does he have to then, he put up what? He put up a $21 billion equity commitment. So Does that mean he has to ultimately sell shares?
He could sell shares of Tesla. He could sell shares of SpaceX. It's a very highly valued company.
There's a lot of spaces that he could. Not to mention, I mean, he has factories. He has personal properties. He does have net assets. But the point is, he does not have $43 billion in his piggy bank that he can just quickly go grab.
Well, if you have a Bloomberg terminal, you can go to Rich Go, and you can click net worth analysis in the bottom left corner. He's got about $171 billion worth of Tesla shares, $55 billion worth of Tesla options. He's got $40 billion when it comes to SpaceX, and only, and I use only with a serious asterisk, $2.9 billion when it comes to cash and other assets.
Well, I think why the Tesla piece is so important is not just from a individual Elon Musk kind of point of view, but Tesla is a major weight in the S&P 500. The only reason you're seeing the S&P 500, Dow, and NASDAQ higher is because all of these other tech companies, Microsoft, Alphabet, Amazon, they're all higher. But if you actually look at some of the worst performing stocks, it's going to be Tesla's your worst, and then you have Exxon, Occidental, essentially these oil companies that have really taken it on the chin today.
So, in terms of maybe the trade tomorrow, what are we anticipating? Like, do we start to, I don't know, what are you looking for that might tell you that there's maybe some momentum, for either more deals within the social media space? Like, what are you watching for, like that second day after?
Yeah, well, the second day after is going to be what we need to get commentary out of Twitter in terms of the board structure and in terms of the CEO. Is he going to stay on? Because the big question mark that we still don't know is how Twitter's kind of business model is going to change, right?
And we won't get the thing is, and I say this
probably
problem,
won't get a lot of it.
The problem with this for people like us who are reporters on mainly companies that are public companies is that without these disclosures as a private company, there's a lot we won't know in the near future. Like, we've been so used to getting these quarterly updates from Twitter.
Right.
We're not going to get those quarterly updates anymore if the company's indeed taken private.
That's so true. And actually, the other part of it is just in the near term, in the next 24 hours, is that I believe at 5 p.m. Eastern, 2 p.m. Pacific, there's going to be a conversation with the staff on Twitter.
Yeah.
Not to mention what Elon Musk tweets. So there will be action after hours that isn't going to show up until tomorrow's trading session.
All right. Anyway, this is our top business story on this Monday, and a good one. Kriti, thank you so much. Bloomberg Markets correspondent Kriti Gupta joining us in studio.
Let's get to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Well, the big news, billionaire entrepreneur Elon Musk has reached that deal to buy Twitter for $44 billion and to take it private in one of the biggest leverage buyout deals in history. Also, a New York judge today says former President Donald Trump is in contempt of court for failing to adequately respond to a subpoena to turn over documents into his business dealings. Legal analyst and Loyola law professor Laurie Levinson says the judge appears fed up with the delays.
Trump has had plenty of time to comply, but he hasn't. And so the court has said, unless you do, you're going to be fined $10,000 a day.
Again, Loyola law professor Laurie Levinson. Republicans may be laying the groundwork to investigate President Biden's son Hunter and his overseas business dealings if they take control of Congress.
Sources tell the Associated Press number 3 House Republican Elise Stefanik brought up Hunter Biden's laptop at a recent Intelligence Committee hearing on future threats to U.S. elections. Stefanik reportedly asked if there was evidence of Russian involvement in the release of the laptop's contents to the news media. Hunter Biden's taxes and foreign business dealings are already under federal investigation. If they do become a political issue, the White House says it is ready to defend the president from any claims of wrongdoing. In Washington, I'm Nathan Hager, Bloomberg Radio.
3 rich businessmen are back on Earth with their astronaut escort after a pricey trip to the International Space Station. SpaceX flew them back today, wrapping up a 17-day chartered flight, the first time that NASA has opened its space hatches to tourists. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser along with Tim Stenovic. And as we mentioned, our top story at this hour, Elon Musk landing a deal to take Twitter private, $44 billion overall, $54.20 a share in cash. There will be a meeting with employees at 5 p.m. our time, Wall Street time, and 2 p.m. Pacific. In the meantime, Elon Musk made a story earlier on the Bloomberg terminal about what he wants when it comes to some of his worst critics.
Yeah, this was really interesting. This tweet was sent just after noon today, and we actually broke it as it went by on Quick Take Stock earlier. Musk tweeting that, quote, "I hope that even my worst critics remain on Twitter because that is what free speech means." we should note that, he probably knew things were going to be announced pretty soon. So this was a good tweet to send for people who are concerned about free speech. One caveat that I'll add to this, Carol, is there was some great reporting in recent weeks and recent months. Kurt Wagner did it a few months ago when it came to automated accounts on Twitter. And then Sarah Fryer. Yeah, here in San Francisco, who covers social media companies, wrote about this late last week, about how Elon Musk has been with his critics in the past, both online and offline. And she pointed out the account of a young man, Jack Sweeney, who has a Twitter account that automatically sends where Elon Musk's jet is going. And he does this for a lot of celebrities. And Elon Musk does not like that. And in fact, in the past, has asked Jack Sweeney to shut it down. And even offered him money in order to do it, and Sweeney has been reluctant to do so. Wow, so people pointing to that being like, wait a second, if this is what he, thinks about free speech, what does it mean for Twitter?
Right, exactly. And I'm sure for him it's more of like a safety issue, I would assume, with some of that, or privacy. I don't know.
Yeah, but I mean, all of these jets have this information, even Air Force jets.
That's true. It's all out there and stuff. So, right, either it's free speech, all in. I've been watching the Elon Musk Twitter account, and this was actually his last tweet, which was about 3 hours ago.
He might be busy.
Yeah, he might be busy.
Never too busy to tweet, as we know.
That's what I was going to say. This guy's, I feel like a multitasker on steroids. Anyway, confirm me again, Elon Musk buying Twitter.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Elon Musk makes it official, and Twitter shares are surging now by 5.9%. Billionaire entrepreneur Elon Musk is buying Twitter for $44 billion, using one of the biggest leverage buyout deals in history to take private of a 16-year-old social networking platform that has become a hub of public discourse and a flashpoint in the debate over online free speech. Again, Twitter shares are up 5.8%. Tesla shares, they're tumbling now by 1.6%. Our coverage will continue. S&P surging 23 points now, up 0.6%. The Dow is now higher by 281, up 0.8%, wiping out an earlier loss of 488 points. So a massive reversal for the U.S. stock market today. NASDAQ up 135, up now by 1.1%. Stocks edging higher ahead of earnings this week. Big tech companies scheduled to report, including Apple. Also, China's COVID outbreak continues to compound fears, sparked by faster Fed tightening. 10-year yield 2.82%. Spot gold down 1.7%. $18.99 the ounce. West Texas Intermediate crude down 2.8%. $99.16 a barrel. Recapping, S&P up 20, up 0.5. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. The bailouts of the past few decades, necessary as they were, have created a growing expectation. Whenever there's distress in markets, central banks must step in. Now, some are suggesting they backstop commodity markets too. It's a bad idea. Commodity traders play a crucial role in the global economy, but their process is heavily dependent on borrowed money. Now, some fear that a financing crunch could disrupt the flow of materials to end users such as power plants. Still, a bailout would be hard to justify. The world's trading firms remain profitable, and their current financing challenges are largely their own doing. It's possible to imagine a scenario in which central banks have no choice but to intervene. For example, if a complete cutoff of Russian energy exports sent commodity prices skyrocketing. That time, fortunately, has not come. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive when you're crazy.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
You are listening to Bloomberg Business Week on Bloomberg Radio. Carol Master, Tim Stenovic, as Charlie mentioned, stocks way off their lows of the session. In fact, we are green clear across the board. And of course, our big news, Elon Musk confirming that he has a deal. He will buy Twitter, and he will take this company private.
Joining us now is Hank Smith, head of investment strategy at Haverford Trust Company. Hank joins us on the phone from Radnor, Pennsylvania. Hank, good to have you with us. I know you don't own Twitter, but you are obviously paying attention to deals like this. What can you tell us about your impressions of not only what this means for potential M&A when it comes to public companies being taken private, but just your thoughts around the entire deal?
Well, clearly the market likes it because, you've had I'm not saying this news caused the turnaround, but it certainly helped the turnaround.
Interesting.
And, I think it's probably a good thing and certainly very good for the shareholders, maybe not so good for Tesla shareholders, but that's very short-term thinking. But in terms of what it says for M&A, I think that's a positive as well to have a big deal like that go through. So overall, very much a positive and a fan of Elon Musk winning this.
Well, and it's interesting that you say that, right? If I mean, Elon Musk is a CEO and entrepreneur and businessman unto his own, kind of in his own category. But as you said, when you do see companies feel comfortable enough to do a massive deal like this, that he was able to line up all of the financing and he was able to push it across the finish line, says something optimistic, I would say, right, about the future and the outlook. You only, a sign of confidence, if you will.
Yeah, absolutely. And we don't have financial condition tightness like we did in 08, 09. Look, we have an inflation problem right now, but there are a lot of parts of this economy that look very good. The consumer is in great shape, record incomes, record household wealth, household debt to GDP that's lower than it was, 15 years ago.
Right.
And pent up demand. We still believe that is going to be a driving force for the economy as consumers unleash getting out of a 2-year pandemic. And I think you're starting to see that in spades right now.
It's funny, as you say that, I was reading something, I think it was last week on the Bloomberg, and it said, don't focus on the Fed funds rate, focus on financial conditions, whether or not we see a tightening. That will tell you that there are some problems looming out there. And I do wonder, when you look at metrics about how things are going, right? We have so many cross currents right now between the war and supply chain problems, China growth, earnings growth slowing down, trying to get a handle. The Fed is in a tricky position. But as long as financial conditions can remain loose, we don't see a tightening, that's a positive sign overall.
Right. And look, clearly corporate profits are contracting from what was an unsustainable level of growth last year, but they're still exceeding expectations. They're still healthy. Corporate balance sheets are strong. The banking system is strong, and corporate spreads remain relatively tight. So that part of the market isn't suggesting a recession is imminent like so many headlines are talking about. We're still of the belief that we can engineer a soft landing here, but even if we don't, a recession is not imminent, at least for 15 to 18 months from now, given all of the strength that I mentioned earlier about the consumer.
If we did see a recession within 15 to 18 months or even further on out, what would cause that recession, given all the strengths of the economy that you just discussed?
Right. Most likely a policy mistake. And the obvious one would be the Fed overdoing it. I mean, right now, all they're doing is taking their foot off of the accelerator, if I can use that analogy. If they slam their foot on the brake in a very, very quick manner, got the Fed funds rate, well above its level now, let's say 3% by year end. That very well might put us into a recession.
Hey, you said at the beginning, or we talked to you, that you were not an investor in Twitter. I am curious, Hank, have you just been staying away from all of the fast-growing tech and staying away from the social media space? And if so, do you feel like a deal like this says you think, well, maybe I should have some more exposure?
Well, no, it's even more simple than that. We require a dividend payment, and so Twitter does not pay a dividend, so it's just not in our universe.
Go ahead, Carol.
Well, and then so then does that kind of just, in terms of most of the social media space, that means it's off limits?
That is correct.
But not necessarily technology companies. So think about it from a bigger picture of technology. This is, of course, big tech earnings this week. We're expecting to hear from Apple later this week. We got Twitter, we got Alphabet, we got Meta platforms. Who are you bullish on?
So we have big positions in Apple, Microsoft, MasterCard, and Accenture, and those are kind of our 4 big tech plays.
So talk a little bit about how you're thinking about Apple, the company being able to actually weather these supply chain challenges.
Well, it's been pretty remarkable how they've done it so far. Apple has really held up here, and you've seen a lot of the so-called traditional FANG, and FANG's got many more letters than just FANG. But Apple's been the standout, and I think there's a very important earnings report to see if this stock maintains its leadership or relative leadership or rolls over like so many of the other big cap tech stocks have done. But look, we think it has so many unique advantages, competitive moats, if you will, and so we are long-term shareholders of Apple, regardless of this earnings report.
All right, Hank, always good to get your thoughts. Hank Smith is head of investment strategy at Haverford Trust Company on the phone from Radnor, Pennsylvania. Folks, we've got just a few minutes left in today's trading session, and stocks pretty much hovering near their highs of the session. It was a down market for much of the day, but we look like we are going to end in the green. Tech, once again, an outperformer, up about 1.25%. Shares of Tesla, though, down about 0.6%. Shares of Twitter up 6% at 51.80, so still below that price that Elon Musk offered for the company. All right, it is time to head over to our Bloomberg TV team for Beyond the Bell, live on radio, TV, and YouTube. We're counting you down to the close on this Monday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Rich, and Ali Bassett counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic, bringing together our audiences across Bloomberg television and radio, as well as YouTube, as we parse the most crucial moments of the trading day. Anything happen over the last couple hours, guys?
Nothing at all. What a quiet day. Of course, Elon Musk finally getting this deal across the finish line, that deal for Twitter specifically. We were just talking with Hank Smith of Haverford, and he said, you know, it's very positive when you see a big deal like this actually get done. This is a big, big deal, and Elon Musk making it happen gives you some positive momentum, and he says that's what maybe you're seeing in the equity trade today here.
Yeah, he really said it changed the tone of what we saw with today's trade, and I got to go there. We started to see finally a bid for crypto this afternoon after earlier today, Bitcoin was at its worst place that it's been at, the lowest price it's been at in 6 weeks.
Did you see Dogecoin?
I did see Dogecoin.
Yeah, there's a huge spike there. I guess people think that
optimistic
the joke
because
coin
of the
would now be
Mr. Musk's
valuable.
association
And the
with
rocket
Doge,
ship. I think my favorite quote of all day is turning around Twitter is easy. It's not like it's rocket science, right? So
good.
Sort of puts into some perspective here about a founder or a new maybe CEO. We still don't really sort of know who will take over, but someone coming in who certainly has experience. Romaine, as you take a look again further here on these broader equity markets, technology near the highs of the session.
Yeah, it's interesting, Taylor, to see some of these other stocks also like Snapchat rise. We talked to Brent Thiel over at Jefferies, and the point he made was that those advertising dollars moving over to social media platforms.
Yeah, you got about six of the S&P sectors are actually managing to finish the day here in the green. It's a huge turnaround from earlier in the day where you had 10 of the 11 sectors were in the red here. Let's walk you through the numbers here. The Dow Jones Industrial Average going to finish the day higher by about 0.7%, 250 points if you believe in Dow points. The S&P 500 higher by about 25 points or 0.6%. The NASDAQ Composite higher by about 166 points or 1.3%. The Russell 2000 also getting in up about 0.7%. And we should point out, of course, Twitter going to finish the day slightly higher here on the day at 51.69, but that's still below 54.20.
All right, I know we're going to get into the sectors in just a moment, and this is going to play out when it comes to the equity trade, but I've been looking at WTI crude futures because they were down almost 7% at one point. Taylor finishing the day down about 3% at 99.13 a barrel.
Carol, really interesting when we take a look at the sector winners for our radio audiences. We do every day. We try to dive two levels sort of deeper here to really understand sort of the internals here of the market. Hate to break it to you, maybe not surprising, media and entertainment, Carol, it is the top performer. You're still up about 2%. You have the semiconductors as well and software. So sort of big tech, actually, as we've been talking about, a lot of the big outperformers here. You're up anywhere from about 1.7 to 2% or so on the day. Down on the bottom of the screen, it could be sort of a classic sort of rotation trade here. You have auto components, energy, utilities as well. Those are some of the worst performers. You're off anywhere from about 0.5% to actually almost 3.5% here down on the day.
All right, so let's get to the gainers. I had to do Twitter. I did it before this deal was finalized. Twitter finishing off its highs of the session, but still up 5.6% to 51.69 a share, so below that 54.20 offer made by Elon Musk, but nonetheless, this deal getting done. Got to also mention some kind of either, possible deal flow kind of in the news today. Kohl's up about 5.3% in today's session. New York Post coming out and saying the owner of JCPenney, we're talking about Simon Property Group and Brookfield Asset Management, offering to buy Kohl's in a more than $8.6 billion deal, or about $68 a share, which would be almost $8 more than where the stock closed. Again, this is just some rumors out there from New York Post, and they are saying, according to people familiar, so we'll see whether or not. But this has been a one that has definitely been getting a lot lot of attention from activists. The stock is up about 21% so far this year. And then also in the social media space, Match Group up almost 7%. There's some speculation that this could be a potential target for Meta or Twitter. Traders have been talking about that, Seeking Alpha, writing about it, but nonetheless kind of out there.
Yeah, I'm glad you flagged those too, because there was a lot of deal activity. And don't forget about PS Business Parks, which of course isn't quite the well-known name here, but there was also a deal there by Blackstone to buy that company for about $8 billion.
Deals, right? When there's deals, it's kind of some positive thought about the outlook.
Mm-hmm.
Well, I wanted to keep an eye on shares of Tesla today. They actually ended up finishing the day down only 0.7%, but they were down more than 1.5% after this deal was announced. They were down throughout the day. Worth keeping an eye on these shares. Elon Musk is the single biggest owner when it comes to Tesla stock. He owns about 17% of the company. Tesla investors really are left guessing as to what the impact of this deal could be. Some have been worried that Elon Musk might have to sell some shares of his stake in the EV maker to pay for Twitter. Dan Ives over at Wedbush said earlier today that he does not believe the Twitter bid will result in a major sale, though, of Musk's Tesla shares. Digital World Acquisition Corporation, DWAC. This is the blank check firm that's set to merge with Trump Media and Technology Group, which owns Donald Trump's Truth Social. That down about 13% today. The concern there, of course, for shareholders is if Trump does go back to Twitter, then what would the point of Truth Social be, his own personal social network? Investors sending shares of that lower. We should note that Trump did tell Fox News today that he doesn't plan a Twitter comeback if his permanent ban ends. We all know never rule anything out when it comes to that, though. Netflix finished the day down by 2.6%, down for a fourth day in a row, still moving lower even after yesterday's report, so it doesn't seem to have bottomed yet, or it didn't bottom last week, I should say. Shares are now down to the lowest level since January of 2018.
Tim, it's interesting. We'll go on over to the yield space as well. It was actually a pretty volatile day. At one point this morning, I had a great chart showing that, I know it's only Monday, it's the first day of the week, but we were still looking at one of the biggest yield declines that we hadn't had since about March and April of 2020. Now, all of that, of course, erased. At one point, we were down about 13 basis points or so on the day. You're still only down about 4, 5 to maybe 8 basis points or so, but certainly off the lows when we think about the yield lower. And really, this has reiterated a lot of the themes of a Federal Reserve that, of course, is clearly in focus as we think, Carol, about the macro picture, and then, of course, maybe sort of any boost that this gives to technology when you don't have to discount them at such higher yields, maybe a little bit of a boost to that sector today.
There's a headline crossing the wire, and we're going to talk Twitter ad nauseum here, saying that the Twitter deal is said to include a reverse termination fee. So effectively, Twitter, I assume I'm interpreting this correctly, would have to pay Elon Musk or his entity in some way or another should they walk away. Usually it's other way around, where the bidder effectively would pay a termination fee should the deal fall apart. There's a broader question here, guys. And I mean, I don't want to get too critical of the board here, but why this deal was accepted so fast, why there wasn't a little bit more effort to seek out other bidders here, and whether a 54.20 plus a reverse termination fee, whether that is in the best fiduciary interest of existing shareholders.
Well, that's a good point. I mean, they've had a couple of weeks, right, to deal with this offer out there from Elon Musk. I don't know.
Carol, you've been in this business a long time. You know how long these deals normally play out.
Yeah, but Elon Musk is somebody, I mean, this is the guy who built the China factory, like, in record time. I mean, I think he was certainly out there. We talked with Leanna Baker. I think you guys did as well. I mean, Wall Street's been talking about this, right? And I'm sure everybody was looking into Twitter and whether or not they wanted to make an offer. I guess it's quick. I don't know. We shall see.
It's also important to consider that within the last year, Tesla shares had been as high as $73 a share. That was back in July of 2021. So a significant discount as to what they've traded at over the last year.
The only pushback, though, is that the past trading, and Tim, you know this, I'm not preaching to you, but that has no indication on the actual value. That all of the analysts that we've spoken to said this thing was $48 to $55 a share. No one actually thought that $75 was fair value for that company.
Well, and Twitter couldn't get above really the asking price by Elon Musk, right? So it's not like the street even thought that it was worth that.
And the thing is, 2 weeks, but every bank on Wall Street, right? I mean, every private equity firm was approached about this deal, and so many had passed. So you have to ask yourself, was this the only option left? And yeah, go ahead.
Well, that's the right question to ask here. Maybe there really wasn't anyone else there who was even remotely willing to come near that price. But again, it does the idea here that a board is supposed to be a little bit more thorough in this, and it gets to the idea of maybe some of Musk's criticisms of the board, the idea, at least in his words, that he thought that they were inept and that they weren't moving on things. The question is why maybe you didn't see a little bit more diligence on their part, not only to flesh out Musk's deal, but whether to see if there was anything else out.
Well, it makes me curious about their earnings earnings report, that's coming up. Because this is a company that for years we have talked about, all right, how do they monetize it? We all understand it. We understand how it works. We all use it a lot. But the monetization question has been out there for such a long time. So at some point, investors or the board has to say, maybe Elon Musk, he can shake things up and do it in a better way.
Okay, I got a question for you guys. Twitter shares closed at $51.70 today. They still closed shy of $54.20. What's the market saying about this deal? Why aren't they trading at $54.20, or at least closer to it?
We asked that exact question. The market said it's not a big enough discount to be worried about it. It's just a little bit, a couple dollars to maybe sort of get it behind the finish line, Shanali, that maybe even an SEC quick review. But I asked that question, Tim, because I was curious, and they said the discount isn't big enough to get worked up about it.
Yeah, and it's a merger arbitrageur's paradise, right? That delta. People will be making money off of that, too.
Armandeep Singh saying no easy fix to the business model. We know. We've been talking about this for years on Twitter, so it's maybe a longer-term story. All right, we did it, though, or Elon did it, finally. Of course.
Finally.
Not yet.
As he
tweeted.
I think there are a lot of lawyers
true.
and bankers out there that saying not just yet, not until they get their checks.
All right, we got to run. That's going to do it for our cross-platform coverage on this Monday on radio, on TV, and on YouTube. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I am waiting for Elon Musk to tweet on this, and still I haven't seen anything, but maybe he's just got to be...
I told you, Carol.
He's got to be careful.
He's busy, right?
Well, I mean, the hard work is done.
It is. Okay, I got to point something out, though. Taylor mentioned that a lot of the analysts were saying between $48 and $55 a share. We got Argus out with a $65 price target, Evercore ISI saying $60, Morningstar 58, Atlantic saying 55, Loop Capital saying 51, a bunch of companies saying $50. So maybe Elon Musk got a deal?
So it looks like, I guess, maybe. I don't know. And Elon Musk, it looks like he's retweeting something about free speech. Is the bedrock of a functioning democracy, and Twitter is the digital town square where matters vital. This is something he said before.
He just tweeted that?
That just came across.
Look at that.
Yeah, just coming across.
Ask and you shall get a tweet.
Thank you, Elon. Must be listening to our show. All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Elon Musk is adding to his empire, as you have been discussing. He's reached a deal to buy Twitter for $44 billion and take it private. The company says investors will receive $54.20 a share. And ahead of the deal, Musk said he did want to buy the social platform and make it a bastion of free speech. There had been speculation it might mean that former President Trump would be reinstated at Twitter after being permanently banned last year following the Capitol riot. It'll be a fine of $10,000 a day for Trump as long as the Trump Organization refuses to abide by a subpoena for company records. A New York judge says the former president is in contempt of court as long as he refuses to turn over corporate documents that were requested in the investigation by the New York Attorney General. Loyola law professor Laurie Levinson on the decision.
It appears that the judge in New York has finally hit his limits and is tired of Trump and his organization delaying.
Loyola law professor Laurie Levinson, the judge said today Trump's responses so far, quote, doesn't cut it. New York's Attorney General Letitia James says today's decision is a case of justice prevailing. She says it shows no one is above the law. President Biden hosted the NHL's Stanley Cup champions, the Tampa Bay Lightning, today at the White House.
Buccaneers won the Super Bowl. The Rays won the pennant. And these guys behind me became back-to-back Stanley Cup champions.
The Lightning presented Biden with his own jersey, number 46. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with Tim Stenovic. I have to say, when we do these stories and we talk about different things, most read, we're like, oh, maybe we should do this. It does feel like the only game in town on this Monday is the Twitter story. And Elon Musk getting it across the finish line. This happened at 2:50 p.m. Wall Street time. Elon Musk to buy Twitter for $54.20 a share in cash. That was the original price that he put out there, and he will be taking this company private.
Yeah, one thing I want to know, Carol, that we haven't hit too much upon yet is about product changes. Our own Ed Ludlow and Kurt Wagner out with a piece saying that they've locked down changes to its social networking platform through Friday, this after accepting a $44 billion bid from Elon Musk. So what this does is it makes it harder for employees to make unauthorized changes, according to people familiar with the matter. What they've done done is they've put a lockdown on the product so people can't change the product at least for a few days.
So employees used to be able to make unauthorized changes?
Not every employee, but if
Okay.
you think about it from an engineering perspective, there are many people who have
Could
the
tweak as they
capability.
go?
Yeah, I mean, that's part of their job is to do bug fixes and make changes to the product.
Yeah, it's interesting. Well, and I guess it's just kind of a lockdown. Like, wait, let's all talk and let's figure out what we're doing.
Yeah, Ed Ludlow and Kurt Wagner referring to somebody who asked not to be identified because the situation is private, saying that Twitter will not allow product updates unless they're business critical.
All right, so Tesla shares, meantime, did fall this afternoon following that news that Elon Musk is buying Twitter in a $44 billion deal. Shares of the EV company just down about 0.7%. So we did see a little bit of a tip lower when it comes to shares of Tesla specifically. But it's going to be interesting. I know I kind of said, done deal. And of course, it's not done until...
So what is it? What did Romaine say? The bankers cash their checks?
Yeah, exactly. But it's interesting, as you said, that Twitter deal, including a reverse termination fee, which sounds like if Twitter says, wait, we're not going to do this, that Elon Musk gets paid. Typically, it's the other way around. So, but, this is a story that we have been focusing on for the last couple of weeks or so since we found out about that passive stake in Twitter by Elon Musk.
You're listening to Bloomberg Radio. Carol Masser, Tim Stenovec, and this is Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. Aris Management is going to be buying a lending portfolio from Annaly Capital for $2.4 billion. Earnings after the bell, Whirlpool shares. They're trading lower after cutting its full-year sales and earnings forecast and announcing a strategic review of its business in Europe, the Middle East, and Africa. Whirlpool shares, they are down now by just about 2.7%. Elon Musk makes it official. Elon Musk, I should say, makes it official with Twitter, landing a deal to take Twitter private for $44 billion. Twitter shares advancing by 5.7% today. Tesla lower today by 0.7%. An update on Wall Street. Big reversal today. Stocks rebounded ahead of big technology earnings this week. Stocks rose in a late-day turnaround as dip buyers emerged. We had the S&P advancing 24 points today. At one point, the S&P had been down 71, but it ended the day with a gain of about 0.6%. The Dow up 238, up 0.7%. NASDAQ up 165, a gain there of 1.3%. 10-year up 20, 30 seconds. The 10-year yield 2.82%. Gold down 1.7%, 18.97 the ounce. West Texas Intermediate crude down 3.2%, 98.84 a barrel on WTI. So again, recapping, stocks higher. Tesla briefly today. Tesla rallying again by 5.7%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So you know how we talk about a recalibration of the world because of the pandemic, because of supply chains, because of the war in Ukraine? Well, things are changing, and we are especially seeing this in the energy markets, and that takes us to today's Bloomberg Big Take.
Will Wade wrote today's Big Take. It's called Russia's War is Turbocharging the World's Addiction to Coal. Check out Will's story and more from Bloomberg's The Big Take. It's on the Bloomberg terminal and at Bloomberg.com/Big Take. Will, good to have you with us. I got to say, I told Carol this. I think I said this to you when you walked in. You asked how I was doing, and I said I'm a little more depressed than I was earlier today after reading this story because my big takeaway is we're not moving away from coal anytime soon, regardless of what happens in Russia.
No, my beat's kind of a downer. It's really important, but the coal industry is going to be around for a long time. We think it's probably going to peak global consumption maybe 2025, 26, and then there's going to be a long, long, slow decline, like decades.
So, okay. So what does that mean for the environment? Like, you know, the one thing the pandemic showed us, Will, right? We were talking about this before we got in, that how quickly by shutting down the economy, all right, we don't want to do that, of course, but how quickly things improved in terms of air and visibility. Like, it showed to me, like, man, we can actually make a difference if we change our ways. But what you just told me is that we're not going to be changing our ways. So then what?
Well, the thing that happened in the pandemic is people shut down factories, people shut down offices, and we needed a whole lot less electricity. So yeah, coal consumption went down. But once all those things started ramping back up, middle of last year, electricity demand ramped up, and all of a sudden people said, we need a whole lot of coal right now.
So what happened here, Will, in terms of the United States and much of the developed world trying to move away from coal as a source of electricity? Was it the fact that we had a big pushback when it came to nuclear energy over the last few decades, certainly during my time? Does it have anything to do with that? Or is it just the fact that this is the cheapest way for us to provide power?
Yeah, coal is the cheapest form of power. I mean, in a lot of parts of the world, solar is the cheapest way to get electricity, mainly because there's no fuel cost. But, you know, worldwide, it's coal, and it's easy. You dig a rock out of the ground, you can put it on a truck, you can put it on a boat. You don't need to turn gas into a liquid at, like, really cold temperatures. You just move it, and you store it in a pile on the ground. It's really easy to use.
Well, so, okay, I do also wonder, so what, on the other flip side of this, is the lack of alternative energy to kind of swoop in and take over for coal. Where are we when we compare the different energy choices that are out there?
Well, at least in the U.S., we get about 20% of our power from nuclear, and it's been really steady. at that number.
Which I find surprising because I always think we're like so anti-nuclear. But
We are. I mean, the last nuclear power plant in California is in my hometown, Diablo Canyon. It's set to close and be decommissioned. And I spent my whole lifetime hearing people trying to get it shut down.
But 20%.
About 20%. It's been steady there for a long time. Wind and solar are increasing really, really fast. They're coming on so fast. It's about 20-something percent. Coal's about 22% too. It rebounded last year. Last year was the first time we saw more wind and solar than coal.
So this is where I wonder when you say coal is so cheap. Like if I'm running a publicly held company, I got to cut costs somewhere, right? Or I'm going to go for the most cost-efficient maybe mode of energy, right? Potentially. But at the same time, increasingly governments here in the U.S. and around the world are putting pressure on us, or putting pressure on companies for more sustainable methods. So I'm trying to understand, does the government need to put more pressure on companies or more penalties on companies who aren't doing things in a greener way, or what to make this move along quicker?
Well, I think the interesting thing about this bump in coal demand that we saw, especially in the U.S., is it's going to be temporary. The rebound.
What's temporary, though?
Well, next
few years,
2023-ish.
Okay.
Like at least in the U.S. and maybe Europe. I mean, the war is a wild card in energy supplies in Europe. But the big bump in coal last year came because natural gas prices went up so high. That's the other factor. Natural gas has always been really cheap, but then last year, when we needed a whole lot of electricity, gas prices went up around the world, and that's when the utilities switched. They said, whoa, gas is so expensive, let's use more coal this month instead of gas.
What about when it comes to China here? If you take a look at the interactive feature in the story, the first chart shows how much coal other countries use. China by far the biggest, and continuing to grow.
Yeah, China's the biggest user of coal in the world.
By far.
Yeah, by far.
Is there a pledge from China to decrease its use of coal? I mean, what should we think about in the context of that? Because the U.S. can do whatever it wants, and Europe can do whatever it wants. But if you don't get China and India on board, you're still using a lot of coal worldwide.
China and India is the second largest, and they're both really big consumers of coal. China's made a pledge for net zero in its entire economy by 2060.
That's many years away.
Yeah, well, the rest of the world has kind of gone for 2050.
I'll be dead by then.
I hope
Hopefully not.
No, but I'm just saying that's such a long time.
Yeah, that's true.
Sorry.
You won't be dead.
Sorry, the impact. Do we have plenty of coal out there, though?
Oh, there's tons of coal.
There is tons of coal.
Yeah.
Which is part of the problem, right?
Well, actually, one of the saving graces is that everybody knows that the long-term future of coal is grim. Nobody thinks coal has a permanent future, which is why I don't know anybody that's investing in building a new coal mine. So one of the factors that's decent today is that there's not enough coal.
All right, well, good to know. Will Wade, check out his story. Will Wade of Bloomberg News. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's a good thing it was a quiet Monday.
Oh, yeah, nothing happened.
Nothing going on.
That sound you hear is, many reporters changing angles on things that they were writing for later today, and now starting over with Twitter. Although many people saw this coming. Let's just say Kurt Wagner's story looked like it had been written with this in mind.
Elon Musk knows how to get attention.
He really does.
And of course, the big story, Elon Musk agreeing to buy Twitter for $44 billion, one of the biggest leveraged buyout deals in history, taking that company private. We're going to get back to that story in just a moment.
First, though, let's get an update on what's going on after hours. Here's Charlie Pellet.
Thank you very much, Tim. We did hear from Whirlpool. Shares lower after cutting its full-year sales and earnings forecast and announcing a strategic review of its business in Europe, the Middle East, and Africa, down by 2.7%. Cannot report enough on the Twitter story. Shares rallied today by 5.7%. Twitter ending today at 5170. Twitter locking down changes to its social networking platform through Friday after accepting that $44 billion bid from billionaire Elon Musk, making it harder for employees to make unauthorized changes. This, according to people familiar with the matter. Again, Twitter rallying today up by 5.6%. If we're talking Twitter, got to talk Tesla. Tesla shares lower today by 0.7%. Late day turnaround for the U.S. stock market. Dip buyers emerged ahead of a busy week for technology earnings. S&P 500 rallied back in a choppy afternoon session to end near highs of the day after falling to lows near the 4,200 level. S&P today at 4296, up 24 points today, up by 0.6%. The Dow up 238, up 0.7. NASDAQ up 165, a gain today of 1.3%. 10-year yield 2.81%. Hank Smith is with Haverford Trust, and right here on Bloomberg Business Week, he talked about today's turnaround and the Twitter news.
Clearly, the market likes it because, you've had I'm not saying this news caused the turnaround, but it certainly helped the turnaround. I think it's probably a good thing, and certainly very good for the shareholders. Maybe not so good for Tesla shareholders, but that's very short-term thinking.
Gold today down 1.8%, $18.97 the ounce. West Texas Intermediate crude down 3.4%, $98.57 a barrel. Briefly, Tyson Foods, the biggest American meat company, is spending $60 million to give its workers free college tuition. And Facebook owner Meta Platforms will be opening its first ever retail store in California, hoping to introduce people to virtual reality worlds with a try before you buy approach. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, everybody, you're listening to us. You know the big story, the big business story, and that is Elon Musk buying Twitter. Let's see what Bloomberg Technology Executive Editor Tom Giles has to say about this. He joins us on the phone from San Francisco. Tom, we love talking to you for a lot of different reasons, but you also have that big picture. You've been watching the technology space, Elon Musk among them. What is top of mind as you see him do this deal?
There's a couple things that immediately come to mind. One, just the immensity of this as a leveraged buyout and the idea of a wealthy individual setting in motion a chain of events that results in this company going private, this incredibly influential, it's not the biggest company in the world, certainly in the tech industry, but it's certainly influential. More than 200 million users. All of us are on there, politicians, celebrities. It's become this platform of influence. And this is a very wealthy individual saying, I think that changes need to happen. I don't like the way it's run. And a couple months later, he's the agreed owner of this business. It's a hell of a story. I think the other thing that immediately comes to mind is how much we still don't know.
Yeah.
They gave a lot of detail about the debt financing that's going into this. $25.5 billion in debt financing backing this up. That really showed that he meant business, that he's got a lot of global investment banks that are behind him. But there's a lot we don't know. starting with the $21 billion in equity financing. Where does that come from? Does he sell part of his Tesla stake? Are there partners who are going to come alongside of him?
Yeah.
And then who's going to run Twitter? And what does Twitter look like owned by Elon Musk?
Yeah, you and your team are going to be very busy with stories in day 2, day 3,
this is just the
and so
beginning.
on. It's just the beginning. It's so interesting that you said this is such a large and influential platform. 200 million different people who use it, politicians, journalists. The media certainly loves to hate it or loves to love it, depending on who you are. At the same time, it's been a pretty crummy investment in terms of its return when it comes to the public markets. An annual CAGR of 2.2% since going public in 2013. So the business model hasn't really been sold to Wall Street. What could Elon Musk do to change that, or does he not even care because he's taking it private and he's the wealthiest guy in the world?
That's the thing. You don't have to sell it to Wall Street anymore. I mean, you are going to have to repay your lenders. You are going to have to, you can't just run the thing into the ground, and I don't think that's what he wants to do. On the other hand, he has dropped hints that he's not worried about it as a big money-making, profit-making enterprise. He's said some remarks that make it sound like he's pretty disdainful of the advertising model. So how do you generate, what's your business model? Is it going to be subscribers? That is a huge question. And does it really make sense for a person as wealthy as Musk is to put up this much financially at stake in a business that he's not necessarily going to try to, have make profitable and turn into a growing enterprise? He spent a lot more time talking about his idea of free speech, what that means. But then when you ask, well, what is that going to look like in terms of Twitter as a platform? There's a lot we still don't know. You can't just remove all restraint on what people say. Otherwise, this becomes a cesspool of disinformation, harmful speech, abusive language that people aren't going to really want to spend time on. So there's a lot.
Even worse than it is now.
Well, but like
absolutely. Well, I mean, the fact of the matter is, I mean, Twitter, for better or worse, has imposed limits. They have removed people for incitement of violence. That was the case with Donald Trump. That's how they explained removal of Donald Trump, his permanent ban.
Right.
Does he come back on the platform?
Well, Donald Trump says he does not plan to return to Twitter, even if Elon Musk lifts the former president's lifetime ban. This is, I guess he's saying on Fox News. So, I mean, how important is it to the platform that somebody like that comes back? And we only have about 20 seconds, Tom.
Well, there's going to be a lot of interest in this platform, at least until we know what he does with it. And it sounds like he's going to make a lot of changes. So buckle up.
Buckle up. Oh, what an amazing story. Hey, Tom, thank you so much. Bloomberg News technology executive editor Tom Giles on the phone from San Francisco talking about Elon Musk and that company being bought, or buying Twitter, I should say, taking it private.
Let's go from San Francisco now to Washington, D.C. for a check the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Billionaire entrepreneur, as you've been discussing, Elon Musk has agreed to buy Twitter for $44 billion and to take it private. It's one of the biggest leverage buyout deals in history. The U.S. is pledging more aid to Ukraine following a weekend visit to Kyiv by Secretary of State Antony Blinken and Defense Secretary Lloyd Austin. Congress will be taking up the issue, and lawmakers return this week from their spring break. Bloomberg Government's Emily Wilkins reports the president plans to submit his latest request this week.
We don't know exactly how much that's going to be. Congress still hasn't gotten that request from the White House, but leaders in Congress say that once they get that request, they're going to be moving very quickly on it.
Bloomberg Government's Emily Wilkins. Football coach Joseph Kennedy of Bremerton, Washington, has taken his demand for the right to pray on the 50-yard line at the end of each football game to the U.S. Supreme Court, which has recently been ruling in favor of religious rights.
Lawyer Paul Clement argued for the coach.
Coach Kennedy was fired for that midfield prayer of thanks.
School district lawyer Richard Katsky said the coach publicized the dispute.
Mr. Kennedy's actions divided the coaching staff, sparked vitriol against school officials, and led to the field being stormed and students getting knocked down.
Justice Brett Kavanaugh cited an issue raised by his liberal colleagues.
What about the player who thinks the reason Johnny's starting and you're not is he was part of the prayer?
Attorneys general for red states and blue states filed opposing briefs in the case. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Hey, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic. So you want to talk a little crypto?
I would love to talk a little crypto.
And there's a great story on the Bloomberg. I heard our colleagues talking about this earlier on Bloomberg Radio, actually this morning, about what Wall Street firms who go back a few years and they're like, what is this digital stuff? Like, who cares about it?
Yeah, I mean, that's like the nice stuff they said about it.
There were some more. Did that little.
Yeah, you're like one of the cool kids now. Well, that's exactly what Wall Street wants to do. On Wall Street, Jefferies is expanding banking services for crypto clients. BlackRock is backing a stablecoin. Goldman Sachs is ramping up crypto trading. There's even a former bank executive who switched his LinkedIn profile to an avatar. That makes it look like you're, into NFTs or crypto, blockchain stuff.
But it is interesting. Like, go back a few years when we were all trying to figure it out. We all, a lot of reporting was saying that, well, blockchain is where the value is. We don't really understand these cryptocurrencies. Anytime a head of a Wall Street bank came out, they were asked about crypto and they're like, nah, not so interested. And now you can see certainly a bigger lean in, because increasingly you're seeing they're probably customers and clients want something or some involvement with it.
Yeah, that's exactly right. For years, executives at banks and money managers were some of the industry's most vociferous dissenters, until soaring prices and a flood of investor money drove home the point that staying on the sidelines meant missing out. As demand rises, that earlier resistance could impede Wall Street's latest efforts to stay competitive, just as regulatory uncertainty and internal compliance cloud expansion plans.
All right, so here's a number for you. Institutional investors traded $1.14 trillion worth of cryptocurrencies last year on the largest U.S. crypto exchange. We're talking about Coinbase. That is a 9-fold increase from 2020.
It's only a $2 to $3 trillion market, too.
No, I know, but like the growth, right?
Yeah.
That's pretty impressive. And regulators are increasingly getting involved, which to me says, okay, they have acknowledged that this is a marketplace that they have to have a better understanding and maybe potentially greater regulatory oversight of.
Also making some early investments. For example, BlackRock joining a $400 million funding round in the stablecoin firm Circle. They also struck a partnership with the company to explore capital markets use of USD coin, the stablecoin linked to the US dollar.
All right, coming up, we're going to see if there's a crypto angle to the Bogle effect.
I bet not, if you know Vanguard.
This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Elon Musk gets it done. The billionaire entrepreneur has agreed to buy Twitter for $44 billion using one of the biggest leverage buyout deals in history to take private a 16-year-old social networking platform that has become a hub of public discourse and a flashpoint in the debate over online free speech. Twitter shares today rallying on that word, up by 5.7%. After the closing bell, we heard from Whirlpool. Whirlpool shares sinking after hours after cutting its full-year sales and earnings forecasts and announcing a strategic review of its business in Europe, the Middle East, and Africa. Stocks rose in a late-day turnaround. Dip buyers emerged ahead of a busy week for tech earnings. The S&P today up 24 points, up by about 0.6%. The Dow advanced 238, up 0.7. At one point, we had the Dow down 488. NASDAQ up 165 today, up by 1.3%. 10-year yield 2.81%. Spot gold down 1.7%, $18.98 the ounce. West Texas Intermediate crude 98.59 a barrel. Crude tumbling today by 3.4%. Recapping, Twitter shares rallied today. Elon Musk is buying Twitter. Shares up 5.7%. S&P up today by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks. Well, there are legendary investors and financial innovators that over the decades still stand out. Warren Buffett, value investing, Fidelity's Peter Lynch, amid the rise of the mutual fund industry. And then there's Jack Bogle, whose idea of indexing and index investing was well ahead of its time.
We're pleased to have with us Eric Balchunas. He's senior ETF analyst for Bloomberg Intelligence here with us. He's also the author of The Bogle Effect, How John Bogle and Vanguard Turned Wall Street Inside Out and Saved Investors Trillions. It's a brand new book. Eric, it's good to have you with us. How are you?
I'm good. Just enjoying all the Elon Musk news, and then taking a break to do my job.
Well, congratulations.
Yeah, congratulations. We're taking a break from talking about Elon Musk to talk Vanguard and ETFs with you. One thing that I was surprised to learn here is, in reading the book, is how long it took Vanguard to catch on. This was like decades in the making, because if you look right now, Vanguard is, more than $8 trillion in assets under management. It's just, insert superlative here. Why did it take so long for Vanguard to catch on?
Yeah, this is where I think the story has a little more drama than people think. A lot of Wall Street books are about the rise and the fall. And with Bogle, it's sort of like he just kept, slowly rising. But this guy lived in oblivion for about 20, 25 years. And the reason it took so long, given what people today think is an obvious trade, why wouldn't I own the whole market for 3 basis points, is that he operated outside of the system. Vanguard refused to pay brokers. And at that time, there were no RIAs. It was just brokers. And so if you did not give them money or loads or commissions or kickbacks, they were not going to sell your funds. So he had to get people to leave that system. He also had to try to explain to people that an index fund was not average. It sounded average. He had a lot of people trying to position it that way. So he had to go above and beyond to try to explain, hey, this is not average. So those two things made it take a long time. Also, the Vanguard mutual ownership structure, which lowers fees the more assets it gets, took a while to lower fees because the assets weren't quite there yet. So as the assets started to come in the 90s and 2000s, that's when the fees really started to dip down. And once they got below 20, 15 basis points, it was a done deal. And that's part of the point I make in the book also is the index fund was a kind of a lucky byproduct. The real core nucleus of all the things we're seeing today that were from Bogle and Vanguard are the mutual ownership structure and the structure of Bogle himself, I must say. He was a different kind of guy. And so I think those two things really are what I explore the most in the book.
I think I've talked with you about this before, Eric, but I remember one of my first shows that I did in financial television and financial broadcast, and it was a mutual fund show. And we would always be like, okay, you got to have a Vanguard fund on because it was a low cost, no cost option. And our host was like, why would you pay fees when you can go to Vanguard and get the same strategy and pay no fees? I mean, he really was iconic in terms of his impact on this industry.
Yeah, absolutely. I mean, it is just a modern miracle that you can just get the whole stock market, the whole bond market, and at this point, international stocks for under 6-7 basis points. A 60-40 now can be gotten for 3 or 4 basis points. It's basically frictionless exposure, and that's a big theme in the book I have as well, is that I think, Bogle's called the father of the index fund, but honestly feel like he should be called either the father of low-cost investing, or I like this phrase, addition by subtraction. What he did over 45 years was just remove all the stuff that kind of gets in the way, be it management fees, brokers, turnover, trading costs, human emotion. I mean, taking all that out, then you get the total market with its almost frictionless exposure. And that's why it's a smash hit. And it's not just Vanguard, which takes in $1 billion a day. The rest of the money goes to Vanguard-esque index funds, even from Fidelity, right? The fierce rival of Vanguard. That's how Fidelity's flows come now, is through those low-cost index funds. I mean, the whole industry now basically is governed by Vanguard's mutual ownership structure, which nobody copied, but yet they have to copy it in a way.
Eric, when I was reading this, I thought back to this article I read in The Atlantic about a year ago by Annie Lowry. It's entitled, "Could Index Funds Be, quote, worse than Marxism?" And it's actually a quote from analysts at Bernstein. They've called passive investing worse than Marxism. I see you on the Zoom laughing right now about this. What do you make of criticism of passive investing or index funds such as this?
Yeah, and most of it's laughable. I mean, the Marxism, somebody else said that they're worse than the misuse of antibiotics. I mean, I've heard it compared to the Salem witch trials. People go crazy with this stuff. Look, if you think about it, all people have done is move from closet indexing. If you look at the Fidelity Magellan, it largely owns Apple, Amazon, Google, right? And they've moved to actual indexing and saved about 70 basis points in the process. Everybody owned the same stocks. They just now own it in a different format. And indexing isn't really necessarily totally passive. Russell 1000 is different than the S&P. The S&P, by the way, is run by a human committee. It has some rules. It's just more rules-based active. So I try to get rid of that line between active and passive. What really is going on is low cost. And I premise in the book that let's say indexing wasn't a thing, and Vanguard had their mutual ownership structure and only active mutual funds. In my opinion, they would be the biggest active fund manager 6 times over because they would have been bringing a gun to a knife fight over and over. It's the low costs that's the thing. And I don't think anybody who writes these articles would really have too much of a problem. The one thing we got to watch for is voting power. Vanguard and BlackRock now own about 7-8% of all stocks. And so we have to wonder, how are they going to make sure that they don't vote in a way that is different than their shareholders or misuse that power? So far, I think they're fine, but we have to watch that. That's probably the one thing I would think about watching.
Incredible influence. Hey, we just have about a minute left here. What about Bogle the man? I was surprised to hear about how spiritual he was. Just interesting.
Yeah, look, I asked everybody interviewed this question. Why has nobody copied Vanguard's mutual ownership structure? They said, well, because people go to Wall Street to get rich. They don't want to drive a Volvo. And then the other question I said was, then why did Bogle do it? And they're like, I don't know, good question. So a whole chapter is called Explaining Bogle, where I try to explain the ingredients that went in to create this very unusual person. I almost feel he was miscast in this industry, but maybe the industry needed a miscast in this era to sort of bring it to a more fiduciary place. So he was perfectly cast in a way, but definitely not your average Wall Street titan. And I explore that in a whole chapter to try to explain to you how he happened.
But it says so much, right? Because it was such a different, path that he took versus a lot of other financial and Wall Street titans that are out there. Eric, too short of time. Come back. We'd love to talk more about what's in this book. Eric Balchunas, he's our senior ETF analyst at Bloomberg Intelligence, joining us via Zoom from Philadelphia. Check out his book. Jack Bogle wrote a lot. But what's great about Eric is really just a great perspective on this man who really transformed an industry and way of investing. The book is called The Bogle Effect, How John Bogle and Vanguard Turned Wall Street Inside Out and Saved Investors Trillions. Really thinking about the retail investor from the get-go.
Yeah, great read. I'm really enjoying it.
All right, you are listening to Bloomberg Business Week. For Tim Stanovic, I'm Carol Massler. Have a good and safe evening.